Alright, so let's continue with our next video, which is about the optimal trading rate. Now, if you have any experience with retail trading, you probably know what the Fibonacci tool is. It's right here. Usually it's set up here somewhere. I think here, tools, Fib retracement. So Fib retracement helps us identify a certain area where price likes to pull back. That combined with the other concepts that we have could lead us to have a very good and spot on entry. So for the optimal trading range, I like to use the 0.62 and 0.7 level. So let's just make everything white so we can see them. And then, alright, like this, and make this like a green area. So I like to look for retracements at this level, which is the 0.62 or 0.7. That's just how I figured it's the best area to look for entries. Now, it can be relative. Fibonacci tool is very relative. The optimal trading range can be used when there's not really a good area to enter on. And I always use it on the 1 hour and 50 minutes to look for a pullback. So let's say, for example, EURUSD here, after we made the break of structure to the downside, we're basically expecting a pullback for near session in order to continue bearish. So because we have this area here where we can look for entries, of course, but most of the times price doesn't pull back that much. So if we can add the optimal trading range and then look for additional confluences to our area, then we can take a good trade. So the way I do it is mark it from the high all the way to the low here. So something like this. And you can see the 0.7 and 0.62 level was touched really good. Now, if we go down on the time frames, we can start looking for additional confluences. So the 5 minute is this candle here that caused this big break to the downside. So if I have that optimal trading range, I can do this, make it a little bit smaller. I can even mark the 50% with a different Fibonacci. Let me save this one. So optimal trading range. And then I can use my 50% of that candle to get a better entry. But it's best to just basically look for confluences in the area. So when price makes the bottom, you see price starts to reverse, we draw the Fibonacci because we are near session, we can start looking for an entry, and then we wait for price to come back there and then look for a potential entry. Now, if you really don't want to wait for confirmation, you can basically just place a sell limit at the 0.7 level, covering the high, and target either a 1 to 2 or just a low. In this case, because it actually happened, PCD hour was already close to New York session close, and usually that's when pullbacks and retracements happen. You could just have secured profits there. Now, the goal with our strategy is, first of all, to understand how to trade any situation and any type of trading, whether it is scalping, swing trading, intraday, doesn't matter. And second point that we're going to focus on is having a consistent win rate above 50% with a risk reward to 1 to 2. So I want to teach you all the basics and all the best and easiest practices to reach that 1 to 2 risk reward. So for that, we'll have to understand all the concepts, and then we'll put them together and you'll see what I'm talking about. Now, optimal trading range, as I said, is a good one to enter trades, and then I like to not have the big stop loss, so that's why I go down the time frames, I refine. So in this case, I refine this 5 minute candle. I can go down on the 1 minute, wait for confirmation. Here, price started ranging, made the break of structure to the downside. I can enter on the retest and then just cover this high. And now my risk reward is very, very good. So I can go for a 1 to 2, 1 to 3, 1 to 4, or even a 1 to 5, right? So that way it's just easier to mark and take trades. Now we can also use the 1 hour when we have a major break. So let's say here we had break down with no retracement. You can see there was no retracement. We have the high, we have the low here, then price started to pull back. We can mark the high and the low here, all right, and just go like this. And now we have the area where we can look for a potential entry. So price starts to come back. Here we see we will have the zone where price basically broke down. So that's a flip zone. We can mark it. And now because it's the 1 hour time frame, we don't just enter directly. We can place a sell limit at 0.7 and then have the stop loss here at the 1 level, but it's just a big stop loss for EURUSD. We're not going to trade like that. And then just target the low, which is a 1 to 2.3, because price was really bearish and you see it got hit in a few days. I don't really like trading like that. I like getting in and out in the same day, looking for opportunities. But let's say you wait for price to tap in, go down on the time frames. And we also, as I said, we look for entries only at around 3:34 p.m. BTC+3. That's New York Stock Exchange open. So here price tapped in, took liquidity, gave a nice 15-minute confirmation, then price came back up. But this was after New York Open, which is usually a reversal time, as I said. So best to wait for the next day. Next day, Asia sessions coming in. I don't know why we don't have it. We'll add it later for the next videos. We are waiting for the Asia range to form, and then you see here it's a London Open. London spikes down and then starts to come back up again, retest, and here is our entry because it's again New York session. So I would enter based here because price did manage to create equal lows here as a target, equal highs also, but it's respecting the area very good, and it's inside our optimal trading range, which is basically this area. If it spikes up, that's why we wait for additional confirmation. So once New York is in, we can take a sell, cover the highs, and then target a 1 to 2, which got hit immediately, or just target a low for a way bigger risk reward. And the trade happened next London session. So you see price does like to play around those levels very nice, and give good confirmation for if you want to trade basically with a trend. Here also you see price almost tapped the zone. We also had this 1 hour candle, didn't touch it, price dump. Let's check another example. Here also you see there was no real retracement. I can use it from the high to the low, just the other way around. Right, see price came exactly into that optimal trading range. We look for additional confirmation. What do we have here? We have this 1 hour flip zone that we can mark. We go down the time frames, 50 minutes, right? We have this area here, go down more, have a 5-minute candle there, you see it, right before the break of structure. That's where price reacted from, and this is after London session. So best to wait for New York. New York comes in, breaks, and creates a nice and little continuation here that we can trade, cover the high, and then target a 1 to 2 or just the low. We can even use a 10 pip stop loss, go for a 1 to 2, and then that's the trade. So it doesn't really give entries directly from the optimal trading range, but it's nice to have reaction from that area and then look for continuation if you see the reaction. We're gonna use it sometimes. Me personally, I don't really like to use it, but it's nice to mark the 1 hour areas and the 50-minute areas for intraday trades once you have an impulse. So if you have an impulse in London session, London Open, you have a big impulse, you can basically mark the optimal trading range, wait for price to come back maybe the next hour or two, and then enter based on that to target the highs. Usually that plays out really good in London session. But if you want to trade just based on that, you need to backtest and take trades according to your trading plan.